Welcome, everybody. Welcome, everybody. Welcome, everybody. Thank you for joining us today for our maybe eighth webinar of the year. Um, in total, I don't know how many we've done, a lot of them. So welcome. I am Chike Uzoka. I'm humbled and honored to be the chair of the Financial Services Committee, aka the Money Team. All right. So everything that you need to build your financial house, we have them on our committee. And we have arguably two of the most important people you need on your team. We have a CPA and a financial advisor. Woo! They're going to be dropping some gems. Before we get to our esteemed speakers today, there will be a huge announcement coming. I can't share it yet, but there will be a huge announcement coming because we want to level up our committee and the folks what the work that we're doing. And so we got some stuff coming. Can't say yet. What I can say is that our next event in person, Saturday, November the 8th, from 11 to 3 p.m. 11 to 3 p.m. Saturday, November 8th at the almighty McPhail Studios in Norcross will be our 9th annual Family Financial Empowerment Summit. Our 9th annual Family Financial Empowerment Summit. Bring the entire family, all right? So we're talking to individuals, we're talking to business owners, we're talking to pre-retirees, we're talking to single people, married people, people with kids, people without kids, team no kids, everyone. So come out and hear from our awesome workshop presenters, keynote speakers. We're excited that will be Saturday, November the 8th from 11 to 3 at McPhail Studios in Norcross. If you haven't been to McPhail Studios, you need to check them out because it's an awesome co-working space and event space. All right. So y'all like my merch? Y'all like my shirt? Y'all like my shirt? In the back it says Thrive. You see that? It says Thrive on the back. If y'all like my merch, go ahead and get to it's Black owned. I Got Bank .education, right? I Got Bank .education/shop. The wonderful ladies, young ladies of I Got Bank Save, their merch is amazing. And it ain't just merch, y'all. We talking about scriptural stuff too. We talking about the parable of the talents. I even got water bottles. Look, I got the water bottles, so I'm in the gym flexing on them. I Got Bank, right? And so go ahead and go to igotbank.education.shop to check out this cool merch that I got. All right. So for the newcomers, if it's your first webinar with us, put a 1 in the chat. If it's your second webinar with us, put a 2 in the chat. If you've been if you have been to more than 3 of our webinars, put a 3 in the chat. We appreciate you. Is it Rosalind? Rosalind? Maybe Rosalind? Hey, Rosalind, welcome. Welcome, Rosalind. Max Fortune, welcome. All right, we got some newcomers in here. I love it. I really do. When the new folks are joining us, I love it. I love it. I love it. And so I did that. What else? Rosalind. Okay, thank you. Welcome, Rosalind. All right, I did that and I did that. Okay, so I will be sharing the flyer for our November 8th event coming up. And then we have this is our second to last webinar of the year, y'all. So on November 12th, the second Wednesday in November, we will have our final webinar for the year because y'all know, if you don't know, in December, we need a break. We need a break. So in December, the chamber's like, hush. We do have our gala holiday party in December. Other than that, like, we put a pause on stuff because we all need a break. Y'all need a break too. I know y'all need a break. All right. So cool. So what I was saying about building your financial house. If your foundation is solid, when the storms come, not if, when the storms come, y'all. I know some people feel like we're in a storm right now. with everything that's going on. So when the storms come, if your house is built on rock, you're good. If your house is built on sand, not so good. And so we are super intentional, deliberate, and passionate about giving you the tools to build your financial house on solid rock. Okay. And so today, we have arguably two of the most important people you need on your financial team. Yes, if you're hearing this for the first time, you do need a financial team. You can't do it by yourself, y'all. You can't. All right. And so we have a CPA and a financial advisor today to drop some gems on this one big, beautiful, that beautiful is relative. So I don't know, beautiful is relative. One big, beautiful bill act proposal thing, whatever, right? I don't know what it is, but that's fine because they're going to school us today. I'm going to be learning. Hopefully, you learned something. Put your questions in the chat and there will be Q&A. Write them down or put them in the chat. I'm monitoring the chat on my phone, and so I can make sure that we get to all your questions. So without further ado, I'm going to hand it over to Belita Blasingame and Mr. Paul Mitchell, our wonderful speakers for the day. Take it away.
Yes. Hey, everybody. I hope that everybody's doing well today. I am so happy to talk about this new bill and what it's going to mean for you and your businesses. I know it's like one of those things where TK said beautiful is relative, but at the end of the day, regardless of what policies are put out, we feel our responsibility to you is to really stress the importance of financial education and mindset. So regardless of like politics, the law impacts everyone, and how we prepare and how we strategize really, really matters. So I just want to give a brief background on myself. I am the owner and founder of the JB Method. We are a full service CPA firm that offers financial advisory. And I would say probably the most beneficial service that we offer is our outsourced CFO services. So for those of you who don't know what a CFO is, it's like a chief financial officer for businesses. So if you've ever invested in a stock, then maybe you kind of watch those quarterly financial reports that they do, or the annual financial reports that are put out. And within each of those, they are talking about the financial performance of the business, where the business has been. Have they met their revenue goals? Have they met their profitability goals? Have they met other key metrics that they have for their business? And then they also talk about the future, like where is the business moving? Where is the business going to be redirecting its funds? And what do they anticipate, like the growth and profitability of the business to be? And then a lot of times during that time, they also release if there are going to be any dividends or payouts to stockholders at that time. So we do the same thing, but we specialize in doing that for small businesses. And the reason that I specialize in that is because I feel like it's one of the most overlooked things that small businesses have, which is having that holistic financial partner that is able to really guide them in a strategic way and help walk them through the goals and strategy that they have for their business, and help them be able to put together a budget, help them be able to redirect the funds, them to understand like how the different moves that they're going to make in their business are going to financially impact them from both a revenue, cash flow, and profitability perspective, but also from a tax perspective. And unfortunately, a lot of times the ways that I get my clients is because they are in a financial crisis, right? They've either gotten a levy from the government, from the IRS, because they have back taxes that they haven't paid, or they are just afraid of their financial situation, so they have not filed tax returns. And then let it get to the point where it's so bad that it literally takes a shovel to dig them out of the situation that they're in. So what we help them to do is three areas that we help businesses with. And the first one is like mindset. around money, right? Because most of the people that are part of ABC are Black. So a lot of us are either first generation business owners, first generation millionaires. So a lot of us were not taught the financial foundations that a lot of other people were taught growing up. So we have a lot of shame, we have a lot of perceived ignorance about it. And it a lot of times just leaves us stuck in fear to the point where we don't know what to do. And so we kind of just avoid the financial situation altogether, right? So I work with my clients on that. And then the second thing I work with them on is tools, because it's once you confront it, then you need to feel equipped to be able to handle the situation. And then the third pillar of that is working on then how do we actually put that into work and act on what we've learned so that we can build wealth down the line. So that is a little bit about my company. And I will turn it over to Paul. But before I turn it over to Paul, I want to say something. Like, Paul and I, we met about a year ago, and it was at my first Atlanta Black Chambers event that I ever attended. And we talked about it for a year about doing a joint webinar together. And Chike just so happened to assign us both to do this, and we didn't know it. But one of the things that we talked about that we're both so very passionate about are those three pillars that I talked about, which is education for our community and emphasizing the importance for people to have financial education and to face their fears around it, and to realize that the more you know about it, the more that you can do. And then also equipping our people and turning us from consumers into wealth builders. So I'm very honored to be able to do this presentation with Paul. And Paul, I will turn it over to you to do your introduction.
Thank you, Belita. Thank you so much. And look, you said everything. It's such an honor to be here with you. As y'all can see, everybody, first, good morning. Thank you to Melvin. Thank you to ABC. Thank you to Chike for letting us be here. But as y'all can see, Belita is bad. She is a talented, wonderful person. It's an honor to be here working with her. And just so you know, I'm Paul Mitchell. I am a financial advisor. I work with a company called Consolidated Planning. I cut my chops at a company called Northwestern. Most people know Northwestern Mutual a little bit more. Consolidated Planning is a DBA of Guardian on the insurance side and Park Avenue Securities on the investment side. So everything that Belita said is 100%. I am a wealth builder also. I like to educate people. I like to teach them how to get to that next level now that I know. Prior to this career, I started my career as a strength and conditioning coach, a personal trainer, a nutrition coach, a metabolic specialist, any certification in the realm of health and fitness is where I came from. I owned 2 gyms in the nutrition center, and I was lucky enough just before COVID, somebody approached me about buying my gyms. I took it and ran. Now, it didn't work out so well for that guy because COVID kind of took an impact on gyms. But for me, I hired a financial advisor. That financial advisor now works and is the head of my firm right now. So we work together, and that's how I got here. I look forward to working with Belita in this webinar right now to give you some education about this one big, beautiful bill. Again, your politics are kind of irrelevant, and we're going to leave that out for this. It's only, what does this bill do to take you to the next level, right? And I don't care who's in office. That's how I want you to start thinking. Regardless of your politics, what can we use to get to the next level to do what we need to do in our community? So let's start getting this thing together.
Yes. Awesome. Let me go ahead and share our presentation. So you guys, I just want to frame this One Big Beautiful Bill Act, because I know it can be triggering, for a lot of people, right? Like, I just want to address the elephant in the room before I ever talk about finances, and just recognize that right now, we're living in a time of strong division. But as I was saying at the beginning, regardless of where you stand politically, the polarity that we have in our country right now is real, and a lot of us are feeling it. And it's showing up in the way that we talk to each other, how we interact with each other, and how we think about money. And so my objective here in kind of talking about this big, beautiful bill is not to make our feelings and everything irrelevant about it, but to put our feelings in context of strategy and how we can work with the laws that have been presented to us so that we can continue to build wealth and continue to make informed decisions around our money. So just to kind of give you guys a bit of a background about the One Big Beautiful Bill Act, it was passed earlier this year on July 4th. And so I'm not sure if you guys are familiar with the Tax Cut and Jobs Act that was implemented when during Trump's first term in presidency. And so this bill, a lot of those tax legislation pieces were temporary and were scheduled to actually expire at the end of this year. So what this bill did was basically make some of those temporary changes permanent. A few of them did expire, and then it also made a few additional changes. So those are the things that we're going to be talking about today, so that you guys can understand, how this, because where we were from a tax perspective at the beginning of 2025 is significantly different from where we are at the end of the year. So we're going to be kind of walking you guys through some of those changes. So we have 3 scenarios pretty much laid out for you guys. And so we're going to have a scenario where we're talking about an individual and then all the tax changes that you guys will be impacted by there. Then we're going to talk about businesses and what businesses need to know about this tax change. And then we're going to talk about some retirement considerations. And then we're going to jump into year-end planning. And Paul and I are actually going to tag team this, because one of the things that both of us are very much aware of is that a lot of people don't really know the difference and when to use their financial partners, right? So from a CPA perspective and from an accounting perspective, what my firm helps with is going to be like you keeping up your books, right? Doing your year-end tax preparation, doing your tax planning, showing you how to reallocate your assets in order to save money for taxes. And then if you get into any compliance issues, we also help there. So Paul, do you want to talk about on the financial advisory side, where a lot of times clients will come to see you and how you generally work with CPAs?
Absolutely, yeah. So the CPA, Belita is the foundation of what it is that we do, because a lot of times when we ask for financial information, the things that we need in order to get you to the next level, to create wealth, to provide you with protection, to provide you with 401k strategies, business strategies, when we ask for that stuff, sometimes it's not in order, right? And we can't help some people. So the CPA is sort of the foundation. That's the person you go to, get everything in order, and it makes it easier for financial advisors to then turn around and give you the correct, or provide you with the correct options. Because if we don't have all the information, we can kind of go on some basic information, but the better information we have, the more detailed the information is, the better the choices and options for you as an individual and as a business for solutions. So the CPA is the foundation for what we do. I send every client that comes to me, if they don't have a CPA, I'm definitely going to refer to Belita or my team of CPAs.
Yes, absolutely. And so before we jump into the content, we do want to disclaim that, as brilliant as Paul and I are, this is not to be considered individual tax or advisory advice. This is for educational purposes only. And if you guys are wanting to have, some personal tax advice or financial advisory advice, then you should contact your tax professional or your financial advisor, or definitely feel free to reach out to Paul and I on an individual basis so that we can go over things that impact your particular situation. So even the scenarios that we're going to be outlining some real life scenarios here, but there's so many intricacies to people's individual situations that this is not to be construed to say that these will be your specific results or that you will get the outcomes that we're going to present here. So with that, I will jump into our first scenario here. So our first scenario that we're going to go over is a family of 4, and the profile of this family is a married couple. You know, typical family, 2 kids, $150,000 in income, and there is $12,000 of student loan debt that they have between the two of them. So key tax changes in this area that is most important for people to be aware of. So kind of going back to the Tax Cut and Jobs Act of 2017. I'm not sure if a lot of you remember, but during that time, the standard deduction almost doubled. And so for a lot of families, that kind of phased them out of like being able to itemize. But then there was also, people were able to do some above the line charitable contributions that disappeared a few years ago. So that's the standard deduction that was supposed to be set to expire and go back down to the original amount that it was in 17, that has been made permanent. So right now that looks like $15,750 deduction if you are single, and then up to $31,500 for married filing joint. And so what that means essentially for people is that if you are an itemizer, then you need to have deductions over those thresholds before you can even start seeing $1 of tax savings by itemizing. So that was made permanent. So for a lot of people that were, especially like in this $150,000 income bracket, that were going out, like getting homes, thinking that they were going to be able to have some tax savings around that, I would say just talk to your financial professional to make sure that you will be able to get those perceived tax benefits there, because unless, you know, your mortgage interest, which are charitable contributions and things, are going to be over that standard deduction, then a lot of times you're not going to be able to capitalize on being able to use like that mortgage interest and things like that. So that's probably one of the places where I've seen people just kind of be shocked about that, the standard deduction. So one of the other things that did come back into permanency was that non-itemizers can deduct up to $2,000 in charitable contributions if you're married. If you're single, it's $1,000. That one does not take effect for 2025. That goes into effect for 2026. And so what that means is that if you are giving money to a church, you're giving money to your local organization, even if you don't itemize, you can still deduct up to $2,000 of that if you are married. The other thing on the itemized side, which I didn't really specifically call out, is that there is a new floor as well on charitable contributions as well. So that floor is 0.5%. So now you have to contribute a half a percent into charity before the first dollar of that starts to become deductible under being able to itemize. So that's also another change that came in with the charitable deductions. So SALT, this one has to do, SALT is like your state and local income taxes. So I'm assuming most people here, because it's Atlanta Black Chamber, that are in Georgia. So within this tax bracket, if you live in an area of Atlanta where you pay high property taxes and you have $150,000 in income, a lot of people were being, before this $40,000 cap increase, a lot of people were being limited to $10,000. So that's another thing that came in as part of the 2017 Act, was to say that state and local income taxes were capped at $10,000. So that's been temporarily lifted to $40,000. So for people who were on the brink of being able to itemize, but were limited to that $10,000 state and local taxes, now that's been raised to $40,000. So for a lot of people that have expensive homes or live in a high property tax area, that is a way that you are able to now maybe bump yourself into the category to be able to itemize and take advantage of some of those state and local tax write-offs again. So that one, let me see, for that one is going to, that one, I think I said already that one is a temporary one. So the next one is one that Trump ran on, right, which is the no tax on tips or overtime. So there is a cap on that. So no tax or on tips or overtime up to $25,000 for married people. And so for the tips, it's just a straight $25,000. And for overtime, it's $12,500 if you're single, and then $25,000 if you are married. And so I know a few people have asked, well, now, can I just change my income over to tips? So no, it's going to be, do you work in an industry where, tips are common? And so, definitely don't try to do any type of tax evasion on that. But it does open up a lot of opportunities, especially for married couples, where if you're an hourly worker and you have a lot of overtime, or if you're working in a service industry that has tips, this one is going to allow you to get a deduction to be able to lower your tax income for sure. So that is something positive that kind of came out of that bill. The other thing is that there is a new provision in here to be able to deduct up to $10,000 in interest for a car loan. And so that is a temporary one as well. But the caveat on that one is that it has to be a car that is assembled in the US. And of course, you have to take out a loan on it because only the interest portion of that is going to be deductible. But obviously, I would never suggest somebody to go out and buy a car, just to get a deduction. But if you are in the market for a car, then maybe this is something that you want to kind of look at and ask about, where the car was made, and if that car is going to qualify for that deduction there. And then one of the things that's expiring is the energy credit that was originally set to expire. That nothing was actually said about that in the bill, so that one is one that is going to expire at the end of the year. So Paul, I will let you kind of talk about, with these tax savings, what are some things that on the advisory side, how you will be able to help clients kind of capitalize on these tax savings to kind of help build wealth?
Absolutely. And I'll ask you a question first on the charitable deduction up to 2K. Do you think for those people who are part of nonprofits, who are nonprofit leaders, could that be a strategy to, for everybody that's involved in your nonprofit who gives on a regular basis, could that be a strategy to reach out to those people to let them know, here's something that you could do? I could deduct up to 2K to be able to support my nonprofit. Is that something they could do?
Absolutely. Yeah, because some people don't give just because, it's not a write-off anymore. So this definitely will help, those organizations that are in need, that rely on, social causes to be able to motivate people and give them, some of the power that they need to be able to give funds to their businesses. So
Absolutely. I work with a couple of nonprofits in Florida, and I'm constantly, and nonprofits, we're constantly asking average people for donations of $25, $50, and that's fantastic. But I try to work with them to look at strategies, and there are multiple strategies that we use to get bigger donations, bigger amounts of money into the nonprofit, so that you could be sure, so that you could rest really well at night, knowing that you're going to kind of accomplish your mission and still be able to get those individual donations. But a lot of nonprofits, one of the key concerns is that they depend on these little donations, and they're kind of scared about what their programming could be. But anyway, so yes, the car deduction is another good one. Use that interest if you're going to plan for buy a car. For this specific couple here, this specific profile, they're a married couple, 2 kids, 150K income, 12K in student zone, 12K in student loans. What might I do? I'm gonna skip the Trump one for now. I might want to start a 529 plan for them. This is something that's been around. You can go on the Georgia website and find this, been around, but I might want to start early and put money away for their education. Now, the great thing about what happened with this new One Big Beautiful Bill is it's kind of been expanded. So it used to be where it was pretty much for college and college expenses. But this has been expanded now to where if you don't go to college, but you want to become a financial advisor, if you want to go to become a plumber, if you want to go to trade schools, you can use the money for that also. If you graduated from law school, the law school expenses were covered, but the actual the bar exam, the cost of that was not covered. That kind of stuff is now covered. So a 529 plan is a great start early on to make sure that we offset some of those same things that 12K that this couple is set with. I might also take some of the money and put into an IRA, because that's one of the concerns a lot of people have is I'm doing so much in my life, I'm lifing, but I don't have money saved away for later on. So we might create an IRA or a Roth or something like that to provide for that. And the last thing we'll talk about is permanent life insurance of some type. Now, there are many different types of permanent life insurance, but the great thing about permanent is that cash value. And for me in my planning, I'm usually going to want 3 buckets from people, right? I'm going to want a variable bucket for them, and that could be 401k, stocks, bonds, anything that's dependent on the market. It's variable is what's going to happen. A fixed bucket, something like an annuity or cash or something that's going to come out there and that is fixed for me. And I'm going to want a liquid bucket, that emergency cash, something that I could, if the water heater breaks, if the tires, need new tires or whatever, I have emergency cash. So those 3 buckets are really important. So I'm going to try to help this family with those 3 buckets in some way. The last thing before I stop with this is that Trump account. This is a new thing by Donald Trump. Now be careful with this one a little bit, because the Trump account, if the Democrats have a 50-50 shot right now of getting into office next time, who knows what's going to happen? I'm not getting into that. But right now, the Democrats have a 50-50 shot of getting back in. If they get back in, the odds of them keeping this thing, or at least in this form, are kind of slim, right? They might keep this account because it is a good idea, but I'm sure they're not going to name it a Trump account. They might come up with their own version. So with this Trump account, they're going to give you, if the baby is born between December 31st of 2024, last year, and January 1st of 2029, they're going to give the baby $1,000 of seed money. You can put up to $5,000 in this account, and even your employer could contribute $2,500 to it. But just think about whether that makes sense for you and your plan, because again, what would happen after 2029, we don't know. So that would take a little conversation between Belita, myself, and you.
Hey, great. Real quick. So 2 quick questions, and I kind of know the answer to one. Joseph asked, and this is for you, Paul, what can you do with unused money in a 529? Wasn't there a new rule this year,
Yeah,
last
you
year?
can kind of you can switch it over. There are a whole bunch of new rules of what you could do with it, but might be that you can convert it over to an IRA, convert it to a Roth, or let's look at another wealth plan, but you don't have to strictly use it anymore for, well, that was another thing, but you don't have to strictly use it for, if it go unused because the kid did not go to college, there are lots of options to use this thing for other things. You don't lose the money.
Good, good. And Belita, Javon asks, when you stated standard deductions are now permanent, does this mean forever or until a new administration comes in and pass new laws to make changes?
Yes. Great question. So until a new administration comes in to make changes, but the thing with tax legislation, right, is that some of it is temporary, right? So some of it has a life end. So with those standard deductions, it was just when it went in 2017, it was temporary and it was set to expire this year. But now, when I say permanent, a lot of those changes were made permanent. It just means they will continue forever until somebody else comes in to change it. Yes.
Awesome. Thank you. You guys can go ahead.
Okay. All right. So let's jump into our second scenario, talking about our solopreneur business owner that is 42 years old, a beauty salon owner of an LLC, and they have $150,000 in income for the year. So key tax changes for a business owner. So a lot of small business owners, why this section is important. The first section is also very important to a business owner as well, right? Because as a business owner, typically your business financial and your business taxes and your personal financial taxes are closely tied together, right? They work hand in hand with tax strategy. And so one of the key tax changes that came into effect was making the qualified business income deduction permanent. So that was another one that was part of that Tax and Cuts and Job Act of 2017, which allowed business owners to be able to deduct 20% of the profit of their business. And so that was set to expire, and that has been made permanent. So that's a very good change for business owners. So that means if you make $100,000 of profit in your business, then you're going to be able to deduct $20,000 of that without doing anything else. And that was made permanent under the tax code. So 100 bonus depreciation was reinstated. And so what depreciation is, for those of you who don't know, like if you buy a capital asset, like a piece of equipment, if you buy a vehicle, or anything else that has a life that's longer than a year, then you are not, under the regular tax code, able to write all of that cost off in 1 year. You have to amortize it over the expected life of the asset. So in 2017, we went to 100% bonus depreciation, but then it started to drop 20% every single year. So then it went to 80%, then it went to 60%. This year was scheduled to go to 40%. So a lot of those, investments that businesses were making, they weren't seeing as much impact for those this year. So that's been reinstated, and that's been made permanent. And that is part of, I think that's a good change, right? Because that encourages businesses to expand, to invest in equipment, furniture, fixtures, and equipment is what we call it, and to be able to hire workers. So that was reinstated and made permanent by the tax code. So that's a good change. And then our research and development expenses are also now immediately deductible. And what R&D expenses is like research and development costs. So a lot of times that's not just, and a lot of people get confused because when they think of like research and development, they think of like software companies, they think of engineering companies, but this could also apply to like a food business. It could apply to a beauty salon owner. If you are doing something innovative and you meet the criteria for it to be called research and development costs, then those are now, you're able to expense those items. It has to be tied to some type of technology, but typically you would have had to amortize those expenses, and now they're immediately expensable. Now, if you say you made some R&D investments last year and you had to go amortize them, one of the great things about this part of the bill is that now this one is actually retroactive. So you can go back and say, hey, I now want to expense these costs. So this one is a retroactive change that allows you to go back to prior years and be able to capture and completely expense costs related to research and development. Now, this is not to get political. I even kind of debated on putting this one in here, but it's a doozy, right? This is a doozy, and that's the expiration of the advanced premium tax credit. But the reason that I felt like I had to put this in here is because a lot of business owners go out to the marketplace and buy their insurance from the marketplace. And at the end of the year, if you are under certain income limits, then you were getting that premium tax credit, which means that the government was subsidizing part of your health insurance premiums. So that is set to expire. It was not renewed by this new One Big Beautiful Bill. So that is definitely something for business owners or anybody that has that buys their insurance off the marketplace, to just be aware that go after 2025. So for this year, you'll be fine. But after this year, then you are no longer going to get those subsidies. So if you had a $700 premium and you were getting a $300 tax credit for that, that's no longer. And so open season is coming up, that time of the year where you're able to kind of choose new insurance. So I just thought that should be called out, especially for our business owners here, to kind of just really think about that, because that will have a significant impact to a lot of people's financials. So Paul, I'll let you jump in.
Love it, love it, love it. Thank you. So yeah, I would, again, profile, 42 years old, business, beauty salon owner. They have an LLC, 150K of income. I want businesses, I have half and half. Half of my business is individuals and families, and half of my business is working with business owners. So with business owners, I really want, especially people like this who work in this this field to think about being able to sell this business at some point, regardless of how this person is 42, they got 20, 30 years left to work. But there's some young person out there who might want to buy this business, right? Instead of making them go through and do everything themselves, they might want to buy this business. This business could be part of your retirement plan, right? But what I want them to think about is a SEP IRA, a simple IRA, a solo 401k. The SEP and the simple are kind of for solopreneurs, maybe one employee or so, but the SEP really stands for self-employed pension. Is really not a pension, but it's kind of designed to be that way. The only thing about a SEP is that as the business, you could put money into that IRA, but not yourself, just as the business. The solo 401k is a little bit more flexible. You could put money into that solo 401k in two ways, and it gets you a little bit more because you, as the business and the business owner, you could put money into this account for yourself. But as the employee, since you're the only employee, you could also put money in that way. So it allows you to grow a little bit more, a little faster. So consider those. Simple is more for when you have employees. But just think about getting a strategy in place because it's another retention tool, and we'll talk about that in a second. Think about a buy-sell agreement. I want especially African-American, especially Latinos to begin thinking about life insurance in grander, bigger ways. Life insurance is not just for when you die. And traditionally, that's what we kind of think about. I'm going to die and I don't want anybody to profit off me, blah, blah, blah. Life insurance is used in so many ways. I cannot explain that. Take me a day to tell you all the ways that other communities use this. And in one way is a buy-sell agreement. So if Belita and I were partners in a firm and I get in an accident one day and I die, Belita doesn't own 100% of this company. Belita is now in business with my wife. My wife owns the other half. She might not even like my wife. So how do we get so where Belita can own 100% of the company and pay off my wife? We buy a buy-sell agreement on one another, right? We use life insurance, and that way, if something were to happen to me, Belita gets paid the life insurance, Belita turns around, pays my wife off, and now she owns 100% of the company. Now, that's a great strategy, but it does get more complex if you have 3 owners, 4 owners, 5 owners of a company. It becomes, because each one of those would have to buy 4 policies on each individual, which could get kind of complex. But I still want people to think about how to use life insurance for a business to build cash value, for a business to be able to do what it needs to do. The last thing for that business owner might be thinking about, so if you're a salon owner, most of the employees are mostly 1099. So you're probably not going to be able to get group insurance on them because they don't give that to 1099 employees. But what a salon owner could do to retain their best employees, what they could do is they could provide their employees with a stipend, right? So the employees would then go and buy disability insurance on their own. I provided them with a stipend, but because I'm providing with that stipend, that is another retention strategy. And I think most businesses don't think enough about the thing that really makes their business grow, and that is taking care of their employees. And here's another strategy that would separate you out from others, is giving them a retention strategy to keep my best barbers, my best beauticians, my best ones. And so that's just one more strategy to help with that.
Love it. Absolutely. Okay. All right. So our last scenario is, ooh, I think I went the wrong way on that. There we go. Last scenario here is pre-retiree couple, both over 59 and a half, still at that $500,000 or $150,000 of income, and they have $600,000 in retirement. So one of the things that Trump ran on, right, was making Social Security essentially non-taxable. Well, he didn't go so far to do that, but he did get implement a senior deduction that's up to $12,000 if you are married, filing joint, and it's $6,000 for individuals. So regardless of if you've started to draw Social Security or not, if you're over that 59 and a half years old, then you'll get this extra bonus deduction on your taxes, which also gives you the opportunity to maybe put yourself into a lower tax bracket. And at that point, you've built up some retirement savings. And so there's an opportunity to do what's called a Roth conversion. And so generally in years where you have lower income, that is a very good way to convert some of your like 401k assets or some of your IRA, traditional IRA assets into Roth so that you can pay the taxes on it, and then it can continue to grow interest free, and then you can withdraw without ever having to pay taxes on it. So that's pretty much the key change that's going to affect people over 59 and a half years old. Paul, I'll let you kind of talk about some ways that people, when they're getting ready for retirement, maybe things that they're not thinking about and how they can better prepare to make their money, so that they don't outlive their money.
Yeah. Question for you first, Belita. So if they're in a higher bracket, a higher income bracket, and they want to, and a lot of money's in the 401k and they want to kind of convert it all, should they convert it all at one time, or do you think there'd be better to break that up into smaller, portions?
Yeah, that's a great question. So that one we would want to that's one where anytime we're doing a Roth conversion or any type of conversion, we want to take a long perspective on that. So we want to think about what's going to be your tax bracket now and what is going to be your expected tax bracket in retirement. And if we take all this money now, is that now going to bump you into an unfavorable tax bracket? So we want to consider all of those things and be able to come up with a strategy to say, maybe you just convert some over the next 3 years, or maybe, it does make sense to convert it all in this year. So it really just depends on the long-term tax brackets that we expect them to be in.
Absolutely. Absolutely. So here, it's kind of short. I really just want people to think about, for most wealth in America for African Americans is in two places. It is generally in the house that you bought, so you have wealth and equity in that house, and it's in 401ks. Most Black people do not have a ton of stocks and bonds and mutual funds. We just don't. We're just not there yet. But I want that to happen. So the great thing about both of those strategies, they kind of forced you to do it, right? Kind of forced you to do it. But with the 401k, remember that money is deferred tax. It came out of your paycheck before you got paid. It's going to grow tax deferred. But when you go to distribute that money and take it and withdraw it, you're paying taxes. So there are a lot of quasi-financial advisors and things who will tell you, hey, you should accumulate $1 million and live off 4%. That is generally not something I would ever recommend. For example, for people who accumulated a $1 million policy, in this case, $600,000 for these people, 4% off $1 million is $40,000 a year before taxes. So you did so well in your life that you have $1 million for retirement. But with the 4% rule, you're going to need to live on now, and you were probably living on 120,000, 100,000 or so to accumulate this million. Now you're going to live on 40,000 before taxes. So really going to live on about 35,000. I don't want you to live a smaller life in retirement. I want you to live a grand life in retirement. When all of us started working, we all thought we were going to travel the world, give money to the grandkids, the kids, do these things. I want you to do that. So let me get into this. I want you to create, as I talked about before, 3 buckets, and that's what I would help you get. I want you to have a predictable retirement income I want you to have long-term care protection. I want you to have legacy planning. I want you to have, so what we might do is we might create, again, a variable bucket. What pile of money of this 600K plus the savings that Belita is going to save you? How can we take that, put into a variable bucket? Because I still want to grow, right? Even though I'm in retirement, I don't want to run out of money. So I need a strategy that actually still continues to make money on my money. I need a fixed bucket. That fixed bucket is like an annuity. And if you don't know what an annuity is, please call me and I'll be glad to explain it to you. That's fixed income. I have a pile of money. In this case, maybe it is $600,000. I give it through a contract to an insurance company. And in return for me turning over this $600,000, they're going to give me a monthly income for the rest of my life. It'll never stop. So I got a variable bucket and I got a fixed bucket. The last bucket is that when I talked about the liquid bucket, in case the water heater breaks, in case I need a new roof, whatever happens, there's a new expense at college, kids want to go to law school. I have another liquid bucket that I could use. So with that strategy, if inflation was to happen, if interest rates went up, regardless of whatever happened in this society, we got this thing because we got buckets to pull from depending on what that happens. So that's what I help people do, along with the help of Belita will save you the money, talk about the best strategies. With that money, I will help create generational wealth and legacy. And then we'll get somebody else in, like an Anitra, I don't know if she's on this call, who then would create a trust for you. And when we put things like life insurance and all your car, your house into that trust, then, hey, Anitra, I see you, baby. So with Anitra's help, sure, we're going to create a trust that now pays the family, pays the kids, and continues this thing so that we have generational wealth. Because the last thing I'll say is most wealth is gone in 3 generations. One generation creates it, the second generation uses it, the third generation, it is gone. So how do we create this generational wealth for our community to do what we need to do? Contact us, baby. And that's it for me.
All right. All right, you guys, we are running low on time. So I think what we're going to do on this slide is kind of just summarize everything. And so the idea of this slide was just to kind of give you guys some year-end tax planning tips. But I would say probably the biggest tip that I can give you guys is to, as Chike mentioned at the beginning of the call, we're having our 2025 financial summit that's happening on November 8th. You guys, we have to do better. We have to invest in our money. We have to think about it as a mindset, and we have to think about wealth generation and not just being consumers. And so one thing that I will leave you guys with is we are in October and we have through the end of the year to do tax planning. So when it comes April 15th for the deadline, it's too late to do tax planning for 2025. That has to be done by December 31st. So I'm already working with my clients right now, going over with them with what they've made for their money year to date, with their businesses. What have they invested in? And then just telling them, hey, we need to do this. We need to shift this around. Maybe you need to make these moves in your personal financials. You need to make these moves in your businesses, because if those things are not set in place by December 31st, then the opportunity to do them outside of setting up, like some individual retirement accounts, most opportunities are gone. And so, we are very, sometimes we're very good at investing in other things, but then when it comes to spending money to get a tax planner or to get a tax advisor and a CPA and spending money to get our house in order on financial advisors, we can just have a closed hand for that. And so it really is the backbone of your life. And so I really just encourage people to come out, get education, and then just also talk with Paul and myself, even if it's just scheduling a complimentary call, just to get an idea of like where you may stand and like some opportunities that you may have to be able to save on taxes or to get some basic financial planning in place. So that's what I will leave everybody with. Paul?
Yeah, just thank you guys for being here, attending. Thank you for the questions. Thank you for that. And yeah, just start to think about things a little bit different. Create your financial team. For some of us, like myself, it may or may not cost you out of your pocket, right? Some clients pay me an advisory fee, but some clients don't pay me. It is like going into a tennis shoe store. In some cases, you buy a pair of tennis shoes. You don't hand the clerk any money for them. You hand them money for the shoes, but they get paid commission. So to come and talk with me, it may or may not cost you anything. So please come. Let me at least build a plan that you could take to any other financial advisor anywhere and get that done. So let's invite everybody to think about things a little bit differently. Think about an abundant mindset instead of a scarcity mindset. And let's go. Let's make 2026 even better.
Yeah.
Y'all, can y'all put your information in the chat for the people, please? Because we need the information. If there's a calendar link that they can click on, just make sure the HTTPS is there. Folks, whoo! Y'all, that was a lot. And I don't know if y'all caught it all. However, they are offering complimentary conversations with the CPA and a financial advisor. Again, arguably two of the most important people you need on your team. And Anitra Walker Esquire is in the building, our estate attorney that helps you with the trusts, the wills, the power of attorneys, all those legal documents, as we say, that's the roof of your house, right? The roof of the house is the protection. And so Anitra Walker, she, Paul, Belita, and some other of our money team moguls will be at our Saturday, November 8th event, our 9th annual Family Financial Empowerment Summit going on at in Norcross at McPhail Studios. So, do we have questions? What questions do y'all have? Real quick, if you want to unmute and ask a quick question, the question starts with how, what, who, when, where, why. Anyone have any questions for our money team moguls today? Anyone have any questions? All right, well, so like they answered all the questions. It seemed like, hey, Paul, Belita, I don't know, but it seemed like y'all killed it. I see
Like, what just
amazing.
happened?
I see great information. I see great information. I see phenomenal. I see phenomenal. I see excellent. I see. Look, the people don't have questions because y'all killed
Yeah.
it. Y'all rocked this.
Yeah.
So I just want to say thank you, thank you, thank you, because our money team professionals are busy and yet they still give their time to share information with us. So we say thank you. Paul's information is in the chat. Belita has put her card in there in the chat as well. Please reach out to them, email them, call them. Make sure you sit down with them before the end of the year. For some people, October 15th is next week. So you still have a little bit of time if you need help with your taxes for 2024. If you are like me and you don't do them in April, you wait, make sure I want to match what they got. I just what you got, Uncle Sam. Okay, cool. That's what I got you. Cool, no problem. You don't owe me nothing. I don't owe you nothing. We good. That's just me personally. But don't. That's just me. It's not ABC information. It's Chica information. All right. And so Mrs. Welsh, you say you have a comment? Was that
Yes, can you guys hear me?
yes.
Thank you, guys. That was great. I'm Cecily Welch. I'm also a CPA and CFP and PFS. And my firm is Welch Financial Advisors, the accountants that you can understand. And everything that both Paul and Belita mentioned are right on target and very pragmatic. I'm excited to hear that. I'm on the IRS Advisory Council, AICPA Advisory Council, et cetera, et cetera. Saying all that to say, I'm actually speaking today for free Home Depot Backyard about businesses. My business is booming. My books are a mess. I'm saying that because my firm has actually transitioned to the education piece and the advocacy piece. Meaning, in the end, when I always talk to people, they're like, "Oh my God, you're right. How do I do this?" And I'm very excited to have names to go, here's who you talk to, because it's the amount of knowledge and experts that you need is so broad. We do all have to work together and make the pie bigger. So I'm excited to go, oh gosh, other Black professionals in this financial space who speak logically of what do I actually do, not just, hey, that's great. We all see those 12-page checklists, but I need to know, what do I need to do first? So
Thank you.
Thank you, Cecily. Thank you.
later, because like I said, I need someone to continue to refer people to. So
thank you. And there's room for all of us, y'all. I just want to share that we are super intentional and passionate about making sure that we get the help we need. We need different kind of help. And so what we strive to do is share the chess game that is being played and then help people understand how you can play the chess game at your level. Everybody don't play chess at the same level. It took me 83 chess games to win my first chess game. Different levels. So I just want to share that if there is information being given out, get the information, sit down with somebody, book a call, do that so that you can make sure that the information you're getting fits your unique situation, because each and every single one of us on this call has a different situation. Again, some have kids, some have no kids, some own a home, some don't own a home, some have investments already, some don't have investments, some have a will and a trust, some don't. Actually, everyone has a will. It's just, did you write it or did the state of Georgia write it for you? Everyone got a will. Everybody got a will. Who made the rules in your will? Was it you or was it the state you live in? All right. So, what I have, I had thank yous again. Our 9th annual Family Financial Empowerment Summit is going on Saturday, November 8th. McPhail Studios, Norcross. We are looking for vendors and sponsors. Please email the money team at atlantablackchambers.org for more information about that. And I have one more. Is she on here? Is she on here? Let me see if she's on here, because I'll be telling people to come on and so. Okay. And we have one of our newest members, New York in the building. New York in the building. Chrissy DaCosta, thank you for joining us today. She will be, she's a new member. She will be joining us for more speaking engagements coming up this month, next month. I just wanted to give her a shout out because again, New York in the building. All right, so what we got? What we say?
Thank you. I appreciate that. I really do. And hello to all of you. And I'm looking forward to joining and being with you guys.
Thank you, thank you. Yes, Dr. Wendy. Listen, it's all relative, right? So everyone's starting at different levels. And so whatever level you're at, y'all, get the help you need to get to the next level so that you can get to the next level so that you can get to the next level. And so thank you for that, for joining us, Dr. Wendy. Thank you for all the new people, I appreciate y'all for joining us. Lisa, yes, the recording. So I don't control that part. That's not my gift. What we do is the recording will be sent to our media team, and the recordings are put on our Atlanta Black Chambers YouTube page. So for everyone that doesn't know, if you're hearing it now for the first time, Atlanta Black Chambers has a YouTube, and our goal is to get to 1,000 subscribers. So please go on YouTube and search Atlanta Black Chambers, and the recording will be on there, I believe, in the next week or so. All right. So thank you for joining. Thank you for being here with us all. Thank you, Paul. Thank you, Belita, for all the amazing information y'all shared, because woo, that was a lot. It is a big bill, almost 1,000 pages of just stuff. So thank you for breaking down those 1,000 pages of that guy's mind, whatever's in his mind, and making it real for us regular folk. So we appreciate y'all. Thank you for joining us. Y'all have an amazing rest of the week. We will see y'all on Saturday, November 8th. I'm gonna put the flyer in the chat again. We will see y'all on Saturday, November 8th. Again, looking for vendors and sponsors. And then our final webinar, man, that's crazy. Our final webinar of the year is going to be November the 12th, I believe. Let me just make sure, because sometimes I'll be talking. I'll check the calendar. The second Wednesday in November is Wednesday, November 12th. And so 11 a.m., we'll be back here with 2 more Money Team moguls, dropping some information for the year end. And so we appreciate y'all. Thank you for joining us. Thank you for spending your time with us. And we will see y'all soon. Thank you, and thank you.
Thank you.
Thanks, Paul. Thanks, Belita. Y'all killed it. I'm so happy. I'm so happy.
It was fun. It was fun.
I grew up watching the A-Team. I love it when a plan comes together.
Yeah.
Some of y'all too young. Some of y'all too young to know, but I love it when a plan comes together.
Yeah.
All right.
Still kicking, man.
Yeah. Yeah. I mean, again, if anyone has any questions, speak now or forever hold your peace. If anybody has any questions, speak now. I'm about to end the recording.
There was lots more in there now in that bill for some of you guys. There's a few more things in there. We just didn't cover it because some of it wasn't relevant or it needed a lot of explanation. But there's a lot more stuff in that bill that pertains to people. So let us know.
Yeah, I mean, in reality, there's so much in there that we can't put it in an hour webinar.
Right. You can.
We need like a conference. We need a conference to go over all this stuff that's in there because there's just so much. So, but I'm just glad somebody said not too
Therapy
young.
session.
I really did grow up watching the A-Team, y'all. And yeah, that was yeah. So good. I'm glad somebody can understand where I came from.
And GK
Kevin.
and the rest of the team, what I wanna I had an idea. I didn't want to say anything to after Paul and Belita did y'all presentation, and it was great. So what I wanted to do before tax season, yeah, when y'all made this presentation up, I said, okay, I had an idea in mind. We need to do something called One Big Beautiful Refund, where people can look at it from the other way, how much money they get, and all of us can put our input in to show them what they need to do to get a bigger refund when they do their taxes. Because y'all done broke down everything in the bill, so we could do another one and show them how to turn it into a bigger refund. And call it One Big Beautiful Refund.
I like that, Kev. And Kev, we talking after this, so we
yeah.
Yes.
Beautiful dollar bills.
And see, because that'll help us get some like we could generate some like get some clients like for tax planning and stuff like that. Cause that's all it is, tax planning. Like we just want to get all the way deep into it, but we'll get deep enough where they can have the information to know what they need to come and schedule an appointment with us with.
Belita, what'd you call it? Beautiful bills?
I said we can talk about beautiful dollar bills.
Beautiful dollar bills. I like that.
I like that.
I like that. The beautiful
sweet.
dollar bills. Dollar bill, y'all. I like that. Okay. All right, y'all. We clowning. All right, yeah.
All right, babe.
All right, I appreciate y'all. I'll see y'all later.
All right, good people.
In a minute.
Thank you, Belita.
Thank you,
Thank you,
Paul.
y'all. Appreciate y'all.
Good job, y'all.
All
All right, y'all.
Thank y'all.
All right.